A shift is coming. Honestly, guys, I'm feeling like it's a Star Wars movie here. Like there's a shift in force. You know what I mean? Now I'm talking about the stock market great reset, starting with companies taking on more debt at higher interest rates. Here, take a look.
I mentioned all the corporate debt that is reaching maturity now and through the next couple years. What impact does that have on the companies themselves? And then what opportunity is there for investors?
Sure. So let's use an analogy that I think you and I can relate to, which is, when you have to refinance your mortgage, you're hoping that rates at the time are going to be favorable to you. So if you got a mortgage at, let's say, 4.25%, and now you have to refinance at 8.25% or 8.5%, that's going to hurt your household income. Well, that's what's happening really for the high yield market. Lots of high yield debt is short term in nature. And what we're seeing is a significant wall of high yield debt that looks like it's going to mature in the next 3 to 4 years. Many of these high yield companies do not have the money to pay off their debt in full. So they're going to have to refinance in an environment in which interest rates have effectively doubled since 2022. So I think for investors, something to pay attention to is how are some high yield companies, not only for their debt, how is their stock going to react to these higher debt capital costs? Because it's ultimately going to hurt their net income.
Yep, definitely not a good look, guys. Now, companies they're probably going to be renewing these short-term debts, and at a much higher interest rate environment, that could prove deadly for many of them. But seriously, guys, I think it's about time that we revisit the stock market and see exactly what's going on right now. Maybe even find some buying opportunities for everybody. Tech stocks just closed out their best first half in 40 years. Yeah, you heard that right, guys. The last time that we saw this kind of tech frenzy was way back when Apple was flaunting its Lisa desktop computer, IBM was ruling the tech world, and Mark Zuckerberg wasn't even born yet. Now, if we go ahead and fast forward to today, the NASDAQ, our beloved tech-heavy index, wrapped up the first 6 months of 2023 with a stunning 32% gain. This is the sharpest first half that we've seen since the glory days of 1983, when the NASDAQ rose a whopping 37%. While tech stole the show in the equity markets, with the S&P 500 notching a respectable 16% gain and the Dow Jones Industrial Average lagging behind at a modest 2.9%, there's a lot more to consider beyond the numbers. Now, you see, despite Wall Street's rosy outlook for the next 6 months, the rest of corporate America isn't so sure. Now, we had our fair share of challenges in the past 6 months: stubbornly high inflation, a debt ceiling brawl, brief banking crisis, and of course, whispers of even higher interest rate hikes. It's been enough to make even the most optimistic investors squirm in their seats. A lot of these new tech investors are optimistic about the market, but we can't ignore the fact that inflation's still hanging around, and that definitely is casting a pretty significant shadow on uncertainty to those proceedings. You know what I mean? If it doesn't ease up soon, brace yourself for the Fed to tighten the screws and keep those interest rates elevated. Maybe even raise them up some more for your credit cards and for your bank loans. Plus, I keep thinking about the bond market. More than likely, if the markets keep running, people will sell their bonds to buy stocks. Now, if this happens, the yield curve inversion will get even worse. And if the Fed actually follows through with their 2-year yield, that would mean that they would raise interest rates even more. Plus, if people sell the bond and the yield goes up, this means that the government and businesses will have an even harder time raising capital, and when they do, they're going to be paying out more in interest. Credit card interest rates, they're going to be rising as well. Not a good look, I have to say. So where exactly does this leave us for the second half of the year? Well, according to the experts at Rosenblatt Securities, tech stocks could be the golden ticket for investors seeking a safe haven for their hard-earned money. They've compiled a list of 13 stocks that they believe should be at the top of your portfolio as they go into the second half of 2023. So definitely stay tuned as we're going to dissect the market. We're going to explore the strategies, and we're also going to talk about these 13 hot tech stocks that could make all the difference in the second half of this year. By the way, for the very best way to invest in gold or silver, be sure to check out the links in the description down below this video, guys. You have to watch out for those financial planners and mutual funds. Now, sometimes they just rake in piles and piles of cash flow with their management fees. Then they ultimately provide subpar guidance. I guess that's what makes them the smart money, but in reality, this is sad for their clients. What do you think though? Should we DIY our own portfolios? Learn about the stock market more? Just drop a quick comment yes or no down below. Now, let's go ahead and talk about these tech stocks. So tech stocks just wrapped up their best first half in 40 years. I mean, seriously, guys, when was the last time that we witnessed this kind of tech frenzy? The NASDAQ, our beloved tech-heavy index, concluded the first 6 months with gains of a surprising 32% from a year ago. The last time that we saw this kind of first half hump was way back in 1983. Now, here's what makes this achievement even more impressive. Like, think about the incredible technological advancements and the shifts that have taken place over the past 4 decades, right? From the PC software boom sparked by Microsoft's IPO in 1986 to the dot-coms bubble frenzy of the 1990s, and of course the rise of trillion-dollar companies in the last decade. The tech industry, it's seen it all. But guess what, guys? None of those eras even came close to the explosive start that we've experienced right here in 2023. So the Federal Reserve has been steadily raising interest rates, and concerns about frothy valuations are lingering. Yet, while it comes to tech, momentum and the fear of missing out just keep investors clicking that buy button. Companies like Google's Alphabet, Facebook's Meta, and Amazon have implemented mass layoffs, but that set the stage for a rebound in earnings and a more realistic outlook for growth. And boy, did that rebound happen. Meta and Tesla both, which took a beating last year, they have more than doubled in value in 2023. Alphabet's also making a strong comeback with a 36% increase after a 39% drop in 2022. At this point, all eyes are on the groundbreaking world of AI. Now, I'm betting you guys heard about AI, ChatGPT, and whatnot, right? Companies like Microsoft-backed OpenAI have become household names with their ChatGPT program, and of course, dollars are pouring into NVIDIA, whose chips are used to power AI workloads at many of the companies that are taking advantage of the latest advancements. I mean, just look at NVIDIA. Shares soared 190% in the first half, lifting the 30-year-old company's market cap past $1 trillion. Now, according to the tech stock expert, quote, "I think you're going to continue to see tech dominate because we're still all about buzz about AI. NVIDIA not only owns the shovel and axes of the AI gold rush, they actually are the only hardware store in town," end quote. Wow, this is huge demand and zero competition. Now, that's what makes some serious cash flow in the stock market. But I think we need to balance this out with the bear perspective, right? What are the pessimists saying about the market? Well, one expert pointed out how the fundamentals get tougher. You look at consumer spending today, the consumer is pulling back. All of that suggests that the fundamentals are more stretched here than not, end quote. Wall Street foresees a rosy 6 months. Corporate America isn't so sure. So let's go ahead and rewind 12 months when investors were concerned about high inflation and, of course, the Federal Reserve's efforts to lower it. Everybody and their mom was talking about how these actions could push the economy into a recession and disrupt financial markets. No recession so far, though. Remember, the White House changed the definition of a recession on us? But still, inflation is pretty high. And if it doesn't ease up enough, the Fed might have to keep interest rates elevated for an extended period of time, applying even more pressure to the economy. But it's not just the broader economy that's in focus. Investors are eager to hear from companies focused on AI. And like I said earlier, guys, chip makers and tech companies have benefited from the AI boom, have seen their stock prices surge. Now, aside from NVIDIA, Apple, the largest company on the S&P 500, they recently reached an all-time high in the stock market, becoming the first company ever to surpass the $3 trillion mark. So now these companies are going to be under very close scrutiny to determine if their valuations are actually based on current realities, or are people just crossing their fingers and hoping for the best. Me, I'm honestly looking at consumer companies like PepsiCo and McDonald's as they play a very critical role engaged in the broader health of the economy. Now, these companies, they've been keeping a very tight ship and instead passed on their inflation costs to the consumers through price increases. But with households starting to tighten their belts, tighten their wallets, and savings from the pandemic evaporating for many Americans from their bank accounts, they're not so sure how long consumers can actually keep absorbing these higher and higher price increases. And so that's why even when investors are bullish, companies seem to be a little bit more cautious about the potential for economic slowdown. A survey of optimism among small businesses ticked higher in May, but it remains pretty close to its lowest level of the past decade. A very similar survey of manufacturing businesses from the Federal Reserve Bank of Philadelphia has also edged higher recently, but it remains sharply lower than 2 years ago. Jeffrey Harmaning, the chairman and CEO of General Mills, recently said on their company earnings call that it was starting to see a slowdown in sales as consumers are feeling the pinch from inflation. FedEx, a bellwether of the economy, they reported lower volumes across its business. According to their chief customer officer, quote, "They're all watching the consumer." Kind of creepy if you think about it, like how all these big companies are all just watching us. But really, the next few months are when we're really going to be seeing the critical insights into the health of the economy. There's definitely the lag effect to consider with those Fed rate hikes too. Markets may be too impatient to see this through. The next 2 months could be good for trading cautiously, as this is when we're going to be feeling the last couple of rate hikes take effect. I mean, a stock market rally could really lead the economy out of a recession, but not if the real recession hasn't even started yet. One way or another, we're going to find out whether we're on a path towards sustained growth growth or headed into choppier waters. Don't miss the next update, guys. Hit that subscribe button now and also tap that notification bell right after. Now, in case you guys are curious, I looked up these 13 stocks that experts at Rosenblatt Securities are now talking about. So the research firm compiled a list of 13 stocks that it believes that investors should have in their portfolios as the first half of 2023 draws to a close. Nearly all of the 13 stocks that Rosenblatt recommends are either in the tech sector or have exposure to AI. Now, as they explain, quote, "We do believe that tech stocks have more room for upside than post-C19 reopening names. We expect tech to continue to lead the market higher, and we believe that the AI enthusiasm is not overhyped," end quote. The stocks that Rosenblatt recommends includes Advanced Micro Devices, AMD, Alteryx, Extreme Networks, Galaxy Digital Holdings, Harmonic, Lionsgate Entertainment, Marvel Technology, Micron Technology, NVIDIA, Rambus, Smart Global Holdings, Viavi Solutions, and Zscaler. All of these stocks have jumped this year except for Alteryx, which, by the way, has fallen 12% in 2023. Now, Rosenblatt still thinks that the stock is a buy. Overall, Rosenblatt thinks that it's time to get in on this AI-fueled gains, as they think that this rally has plenty of runway as investor risk appetite continues to climb the wall of worry. Now, let's not forget that the market is known for unpredictability. I mean, just when you think that you got it all figured out, it's going to throw you a curveball. And so this is why I still recommend having a diversified portfolio that could ultimately weather different market conditions. Now, as much as possible, investments across different asset classes, sectors, and geographical regions. That way you could reduce the impact of market fluctuations and also position yourself for long-term success. Now, of course, I'm not a CPA, I'm not a financial advisor. This is not financial advice. This is purely for entertainment purposes. Look up low-cost index funds. Those are a good way to diversify without breaking the bank. Ultimately, it's up to you as an investor to assess the available information, evaluate the risks versus rewards, and then to ultimately make informed decisions based on your own personal financial goals and your own personal risk tolerance. The bulls and the bears will continue to battle it out, but it's your job to know what's best for you and your own financial situation. Now, of course, you got me. Our comment section is always wide open for your questions, your requests for future content. Just let me know what you guys want me to cover in the future videos. I love hearing from you guys. Hit me up in the comment section down below. But for now, this is our stock market update and daily news report. Tech stocks closing out their best first 6 months in 40 years. Insights into this new tech stocks boom and some stock ticks for you guys to consider. Hope you guys got all that. And if not, feel free to watch this video over again. Don't forget to share this video with everyone you know. I appreciate the likes. Thanks for subscribing, and I'm gonna catch you guys on the next one.